Okay, it says I am live. I guess that means I'm not Memorex, for those of you that are old enough to remember that. And I'll wait a few minutes for people for stragglers to filter in, so to speak. And I know what I'll do. I'll also put this out here. And as you can see, just by looking there, we're at new all-time highs. And in case you're wondering what happened, there was a headline that Trump made a deal with Japan. Okay, people are starting to come in here. That Trump made a deal with Japan, and there was also other news about. I'm doing two things at once. I'm not focusing. There's also news about. Let me pay attention about a potential that Xi invited Trump for a meeting in China. Hey there, Chris. That Xi invited Trump for a meeting in China, I think, next week or whatever. Then there's the whole August 12th, kick the can down the road statement. And so basically, the narrative right now is that it's Taco Wednesday, and this whole tariff thing is going to resolve itself favorably. Well, I think the market just wants it to resolve itself. It doesn't really care how it's resolved. At least that's my take. But that it'll resolve itself, and we can get on to the business of quasi-normal stuff. You know, we still have the FOMC, we still have all the other stuff coming up. Okay, so quick review of yesterday, and I won't review all the gamma stuff, but SPX closed teeny bit green yesterday, up 0.06% by whatever. Um, there was earnings related stuff. GM got killed because of tariff hit. There was some good news in the builders sector, and so what we ended up seeing yesterday was tech underperforming by about a half a percent if you use the QQQ, and RSP outperforming by was one up 1 point something, 1.27%. Let's take a quick look at RSP just for context. So there's RSP. And since we're looking for context, I had meant to do this myself. Where's the all-time high on this thing? It looks like it's at a new all-time high. Let's just look at it daily just for fun. Oh no, it's got a couple little points to go for a new all-time high. Okay, so there's that. And I did mention the rotation in my note yesterday, and it kind of seemed no-brainerish at the time. But anyway, be that as it may, so I mentioned in my notes. So now that we have this change or confirmation of the change in the whole tariff setup, is the rotation over? We had, I think we had 2 out of 3 advancers versus decliners yesterday, 314 advancers, so 3 out of 5, we'll call it. So do we rotate back to tech? Does it just stay broadened? What happens? And your crystal ball is as good as mine. It's hard for me to say from where we sit now. Or do we get at least a little bit of a tech catch-up trade, as if tech needs to catch up? Okay. And so we realized like 4 or 5 points of volatility yesterday. And so what do we get? Realized volatility less than implied volatility. We have a few potential warning signs on the topping warning signs that we've had for a while, but one of them was 20-day realized volatility is down around 8. And according to McMillan, the options guru, that's a warning signal when it gets back up to 10. Similar with put call ratios and all that sort of thing. So internals are saying we're kind of cooked. Of course, we can correct over time, whatever. So just kind of putting an asterisk there. And so today we have, after hours, we have Google, Tesla, IBM. What could go wrong? Uh, I saw Hasbro popped in the morning. We had Solar Edge yesterday that crapped the bed, and we have Sunrun today. I'm just kind of going through what's going on here. Oh, we have existing home sales today. Now we had some builders beat yesterday, and so okay, to us SPX traders, that doesn't really matter, but it does because that narrative spills over into rates, spills over into the economy, spills over into everything else. And so, kind of keep an eye on that. And if you trade other stuff, I mean, I do trade other stuff a little bit, that's something else to keep an eye on. Okay, so yesterday at the close, the straddle price, which is the expected move baked in by the options market, which when we're having realized volatility underperform implied volatility, we close in between like we've been doing, was around 85 on the bottom down here, pretty close to yesterday's intraday low, and was 40 on the top. With this pop in the morning, when I took a look before, the expected move had shifted up. It was about 21 or 22, which at the time put us up near this 50, 55, 60 area up in here. You could do the arithmetic and see where it is. Excuse me. And put us down near this 63.10, 63.05 area. So that's kind of the playground for today. And as a reminder, the weekly straddle from last Friday, the top was somewhere up here, a little bit below 6,400. And the bottom was like a little bit above 6,200. So far with all this, we're within the weekly straddle. Volatility is still underperforming. And if we close below 40 or 35, if we close in here somewhere, 30, guess what? Realized vol, even with this pop, will fail to outperform. Well, it might, because we'll be on the cusp of that. Okay, so that kind of, and VIX, let's take a look at VIX and VIX 9-day for a minute. So VIX, I like to look at that with a line chart. I've been talking ad nauseum about VIX 17, and after the little pop yesterday in VIX collapsed below 17, and it hit 16, round number, 1% expected move. And then now it's just kind of hanging out over here. I saw some mention by some people that at the money vol was increasing. I didn't particularly see it. Look at vol I, at the money vol, but maybe I'm looking at something else. VVIX is demand for volatility. VVIX is kind of heading down towards the July lows. If we go back, let's just take a look at context. So VVIX down like in the sub 90 area. That VVIX down here tends to be, well, we got all the way down here like last year in that June rally. But in the December Santa Claus rally, we were down to 85. So we're getting near a point where VIX is a little too underloved. So just kind of throwing that all in here. And then Scott Nations from Nations Index was talking about call skew, there's call demand, and yes, there is. Somebody in our room flagged a very interesting trade that I'll mention. Actually, I'll mention that when I pull up my option chain. But there's been buyers of 64, 6,500 calls. They've been rolling it out in time. The August monthly, the Septembers, the collars have been moving up, which just gives us this upward drift. If anyone wants to go on the stage, I know my boy here is a bad hombre. He likes to go on the stage sometime. But if anybody wants to go on the stage, just let me know. Oh yeah, VIX 9-day. Let me mention that. I know I talk fast because I think fast, as the wolf said in Pulp Fiction. So the reason I'm looking at this, so VIX 9-day kind of covers the FOMC window and the tariff window. So that's been kind of staying, kind of up there. So I'm curious to see, does the VIX 9-day kind of collapse down to a 12? To see how the 9-day versus the VIX perform. Why is Diamond rallying this morning? My my gut tells me, I'm not sure what the components are, but probably either a catch-up trade or a catch-up trade, or I'm not, I would have to look and see what the individual names are, but it kind of makes sense with the whole broadening theme. And I had forgotten to put on a diamond trade. I typically have one or two on, like if I hadn't forgotten, I would have an August or September fly on, but I closed one a couple weeks ago. I just forgot to put it on. Well, we'll see if there's a trade there. I'll take a look. Well, now that you mention it, you got my attention. Let's take a look at diamonds. Up a little bit, and where's the all-time highs in this thing? Good morning, my friend. So let's see where the diamond all-time highs were real quick. Looks like we're kind of there. So RSP is 3 points away from the all-time high. Diamonds are there. The stepchild IWM has got some catching up to do. Q's pulled back a little bit. And so that's what's going on there. And also, now I'm just guessing, because like I said, I don't really know the individual components that well of the diamonds. I forget. But I got to think that the tariff good news is going to spill over into all those big multinationals. Paul, do you have a take on why the diamonds are rallying? And okay, so now let's go to the positioning. Now let's go to the positioning. Oh, Microsoft's strong, so that's right. Microsoft, maybe UNH is not getting killed for a change. Since it's market cap, since it's dollar weighted, it's kind of even weirder. Okay, let's switch to what's going on. Without further ado, let's look at structure. Okay. So we have a trade today. Now this is market maker short, customer long. Let me switch it to the customer side uncustomarily. Get that? Customer uncustomarily. Because I want you to see something more clearly. You see, we have 63.25.30 customer long call debit spread, and we have 6,300, 62.95 customer long put spread. Now the reason, now this was a trade. Oh, BA Boeing's having a good morning. Thanks. Now let's call this not the IC whale, but let's call it the killer whale pod. And again, this is a systematic trade. RV has underperformed 3 or 4 days in a row, whatever it is. So it's a simple buy a 30, 35 delta, pretty standard buy a strangle kind of trade, only using a debit spread. That's what it is. Nothing fancy schmancy. And so, will it perform today or not? I mean, right now it's looking like it might, or we could easily. And again, I always like to just kind of look at structure, as my buddy Paul used to say, or probably still does. Trust your eye. Your eye is a great filter. Trust your eye. What's your eye showing you? And what I spy with my little eye is this flyish looking thing right here at 25.15. Now, it's not exactly an even fly, so it's an asymmetrical fly. So, it's looking to me like, so here we have the customer long, so that becomes an attractant, but it's a spread, so it becomes a little choppy up here. All-time highs, how much does the market buy this or not? And so if we fail up here, now we could go up here, test up a little bit, come back down, whatever. But if we get down to here, then 63.15, this area seems like a natural landing spot, at least intraday. If this breaks, well, 10.05, where we have that kind of like parking spot. If we break down here, we have a parking spot up here at 20, kind of where there's not a lot of hedging demand requirement. If this breaks, let's switch to market maker positions again. We have a lot of stacked sold options down here, market maker long, so it'll be pretty hard for this to break. 80 was the intraday low yesterday, a scotch above, and so, I'm not expecting a break there. I'm expecting 6,300 to hold. I'm looking more to see how far we go and where the retest comes back in. So getting back to here, so remember 35 was the intraday high, a little over like a few days ago, a week ago, whenever it was. We kind of took that out, by a little bit, as we were trading in the pre-market. 40 is the top of the straddle from yesterday. So if we can get above this level here and stay above here, then 40, maybe continuation to 50. That depends on the rest of customer positioning, and that depends on intraday options volume. Do people start piling on the 63.50s like they like to do? Round number call area. And I know Gamma Edge has a good tool to follow the volume. And I get intraday updates on volume also, kind of visualized differently, and we have somebody who graciously puts the time and effort into updating like big trades. And so also what happens to these, when trades close open in here intraday and that, again, your crystal ball is as good as mine. However, let's go back over here. Actually, let's go here. Whoops. We're not going to type my password in. We're not going to type my password in online. Not that I think anybody would use it, but just people would tell me that I was a putz if I did that. Okay, take two. Okay, I want to show you this. This was a very interesting trade. I did a chicken shit version of it, technical term. Somebody sold basically an at the money. They sold a 10 wide, I sold a 5 wide. So let me show this to you over here. It was kind of cool. Somebody sold about 1,000 of these for about $5 when I looked yesterday, 5 and change, 575, and bought. There's the 1,000. See the? It should be. No, it should be 1,000 open interest. Or maybe I don't know why it's not there. Maybe it says bought the 6360. Yep, it should be 1,000. Oh, it's still showing up as volume. I guess the OI hasn't updated. Bought the 6360, 6405 debit spread. It was about $9 yesterday when I looked at it, $10. I was too cheap, so I did a cheapy version of it for science. Let me see where it is. Here's my cheapy version. So it cost me $250, now it's $350. Just for fun. Yeah, sometimes a long contract. Good point. Good point. So what Paul is saying, and again, I'm guessing that's an excerpt from his note, because Paul is not asleep at the wheel by any chance, by any measure. Now let's take a look at that. Let's talk this through. So basically, what Paul is saying, what Gameg is saying, is here we have this. Oh, this is Michael. Paul's still out of time. Oh, Paul's pasting notes. Hey, Michael. The other part of the team. Okay. My old buddies. Okay, so that there's too much structure around it. I'll agree with an asterisk. The asterisk being, it's still, now because it's 5 wide, it's not going to have that much impact, but it's still a feature. And it's at 25. So it's still a feature. We're still, I'm still going to expect a reaction, but in keeping with Michael's point, or with Paul's point, when we look at the overall structure, which is here, we see a magnet here. We see it's basically kind of light colored. There's just so much else going on elsewhere that This is just going to, possibly matter toward the end of the day if we're over or under it. Because if we look at charm, I'm just kind of thinking it through here with you guys. Let's not look at that view. Let's look at charm. Oops. Here we go. If we look at charm real quick, and charm, for those of you that may not be familiar with the verbiage, is the decay of options delta with the passage of time. Time will pass today, the day will end, and options will either be a zero delta or one delta, and so they have to be hedged accordingly. And the ones that we're close to are the ones that get the most action, obviously. Not a lot of hedging for something down here at 6,200 or something up here at 6,500. And so this thing shows up as a feature, as does that the belly of the fly that I'm calling it below it. 6,300 is actually a bigger feature. There's more interest there. And so these are our features. These are our inflection zones. This is where we're going to see the action. Oh, Home Depot, that's right. I've been nibbling on Home Depot. And when I say nibble, I mean like literally buy 1 to 5 shares a day. If I see a down day, if I happen to notice it, I'll buy a share. I'm up to, I don't know, 430 shares or something, like literally nibbling, like 40 shares, 35, something like that. Getting ready to try to build a position. On the contrarian idea, I mean, come on, it's Home Depot. Getting rid of Home Depot when I got it at 35 and sold it at 50 and thought I was a genius back in the day, Home Depot was good. And I've been in and out of that one for years. And so that's what's going on there. Okay, so pretty much went through what I'm seeing today. You're welcome. Yes. And you can catch their videos on Twitter too. And Paul did promise to come on and do something. We'll do something jointly. We'll put the band back together again when he gets back from Italy. I think he is. And it's nice. I've got a lot of friends in this space. Really, it's touching. It's touching. Okay, so oh yeah, I remember what I wanted to do. Let's take a peek for fun since we have a little bit of time, and remind myself who's reporting today. We have IBM. That's IBIT. We have IBM.
We have Tesla and Google as well.
Tesla and Google, right? Thank you. How could I
I
forget?
really wanted to say about today is in my opinion, something I've noticed a lot before big earnings like this is the market can really just be moving sideways in anticipation for that earnings report. So just don't. I personally would not expect a whole lot of movement, or at least not be aggressive on my targets today.
That makes a lot of sense. And thrown into that, just to muddy the water a little more in the geek section, is we have the dispersion trade where institutions sell index vol and buy individual name straddles or strangles or certified delta, whatever they buy. I'm not privy to all the algos. I'm sure there's all different versions of it. And so that should also keep a lid, especially now with IV this high on these individual names. That's another good point. Now, also, if we were trying to play the catch-up trade, so to speak, with some of these names, but Google, for example, has come back from the dead. Remember, it was like 150 not too long ago. So wouldn't be expecting that much buying in Google. IBM is up there. Oh, now Tesla, everybody's love. You know, the original meme stock. So just kind of looking where they are in relation to their main gamma levels. This is Mentor Q I'm looking at. I'm not seeing any indication that they should move, but that's an interesting point. That's an interesting point. And how is this going to compress the vol or not? Now let's take a look at a couple other things. And for this, I got to go back here. Let's look at, let's look here for fun. Let's look at Mentor Q and let's look at Tesla. Let's just kind of see where the bodies are buried. So you see up at 350 is where there's lots of calls. So that's where we could kind of drift toward probably after earnings. For today, we're just kind of in the zone. And here we got the different, okay. Where's Tesla right now? 332. So Tesla's right here right now, kind of stuck between these two. So I wouldn't expect a lot of movement either. Google, let's look at Google. Probably a lot of action at 200 round number. Let's just look at the matrix instead. And you see it's all bulled up. 16% of the gamma is for Friday. Even more than and the monthly. So between these two, it's like half of the gamma, not half of the deltas. Remember, gamma is time dependent. So now, this is just kind of how I think things through on my own when I'm looking at stuff. I'll just play with the different tools and come up with a quantitative feel for what might be going on. So since we're looking here, let's take a peek at Tesla. And okay, so all right, okay, so now this is flagged as negative net delta. So I'm going to assume that it's small. A couple hundred calls sold here is not a big deal. Now if we just kind of get that out of the way, yeah. But okay, we still have some sold calls and maybe puts here at 340. They'll kind of put a lid on it. You're welcome, my brother. Put a lid on it. Select all. Invert. Let's just look at earnings. So this is sort of the range, and we're at the bottom of the range for Tesla. If we look at the two main ones, Tesla needs over 350. So now what I've noticed is if it exceeds the expected move, 10% expected moves, that's 30 points. 36 points. If we exceed 36 points, which would be 50, then it's to the moon, Alice. And then afterwards, it kind of comes back in. But this has to be hedged out, and if these things go ITM, then and people start piling into these calls, then after this Friday, it would tend to go back down. We see that a lot with individual names. Let's see, I got a message here. Okay, see ya. Yeah, everybody's kind of winding down. Let's take a last look at something VIX, and then, and we didn't even line up trades. Got to line up trades. We didn't even line up trades. So VIX, invert. This is what matters. Actually, it's the 13th. It's the one before. This is what matters. VIX is, no, that's the wrong one. It's the 20th. So VIX is expiring. VIX expiration is after August monthly. SPX. That adds some stability to the August, in my opinion. So now we're trapped below this 17, and I'm not sure how much of this they hedged out in the pre-market. Liquidity is thin. So it'll be interesting to watch what happens here with VIX 16, and to the extent that it was hedged pre-market. Remember in August when we spiked to VIX 60 pre-market, when we had the Japan carry trade, how the market makers had to chase buying VIX futures. Now we came down to only 40, but so obviously not going to be anything this extreme now, but to the extent that there was some chasing here and liquidity comes back, then VIX could go back up to 16 and a half, whatever. So just something to keep in the back of your mind. Any other questions or comments? If not, I'm going to sign off now and go. Oh, wait, I'm not going to sign off now. I got to put in at least one trade. Got to pull in at least one trade. Now, this sounds impressive for 400%, but when you're selling premium and using a couple pennies to buy something, it looks pretty good. All right, so what do I got going on here? So this was an iron con. Wait, hold on. Oh, that's that trade. What do I got going on here? So I have this IC I sold yesterday at the close. Okay, it's slightly green. I'm going to leave it. I mean, I'd rather be a little higher up, but that's okay. I mean, I could buy a debit spread in there, or buy something around it, or just close it out at break even and or a tiny profit and recalibrate. I could do that. So 60, 55, if we want to go kind of narrow. And on the bottom, see, this is gone. This is gone. I'll just take that off and play with what I got. On the bottom, we kind of had those sold calls down here, expected move 25. We're at 30, 35-ish. So most things seem to indicate that there's no juice. So a 10 wide might be a better way to go. Yeah, that's not bad. I'll put in one for fun. And my normal wide ones, I would just do it wider. So you don't really have to go too wide here because premium trails off up here. So you can kind of do the same wherever you go. If you want to go tight, you could probably go above 50. You might sweat. 40, 60 was the top of the straddle in the morning. It's roughly the top now. 25 down. So that's what I would do. As far as a fly, let's just see what this looks like. Now that's interesting for 30 cents. We talked about that 15 area. That's even interesting for a buck. I'm going to put one in for 85 cents and see if they give it to me. If not, I could layer in just a real cheapie for 30 cents and do something like that. A call fly, where would I put it? Well, we saw the 15. That's taking care of that. Other fly I would look at on the upside would be where? Come on. Would be where? On the upside fly, nothing clean. A 30, 50, 30, somewhere in here. 35 something up there. So let's see. $30, $35, $40 for a cheapie. An expensive one, maybe something like that for $1.90. That's expensive. Something up here. So there's really no good cheapie. So I would do this for 50 cents just to keep me in the game. But I don't mind throwing out 50 cents on these and then managing them intraday. Okay, with that, I'm done. My buddy Arshad is here. I don't know if you DM'd me. Did you see my DM? You can just text me, or we'll connect in on DMs and stuff. All right. Take care, everybody. Have a great day. Trade safe. It's Taco Wednesday.